afternoon, ladies and gentlemen. Thank you very much for coming here this afternoon. It's the first time we've been here at this Brenthurst venue, and I think it's a very nice venue. I don't know what you think, but I think it's a superb venue. Mike, thank you very much. We've now done, this is our fourth and last of our, let's call it winter series of seminars. We started in Stellenbosch amongst the wine farmers in a beautiful, beautiful estate owned by Marcus Jooste. He gave us a big discount for going there, called the Lanzarote. We were fully booked, 200 wine farmers sitting there. Cape Town, the same story. Pretoria, we were fully booked, and of course today we've got a very big audience here today. And there's a very good reason for this. We are worried, you are worried about your investments. And the scenario that Mike has sketched is not it's not to scare you, it is to tell you the truth. Because as you might know, I've been writing and talking about this for a long time. I think that let's call it the institutional fund managers and the economists in particular of these companies are not telling the truth or are not allowed to tell the truth. I'm talking about the Old Mutuals and the Sanlams and the Liberty Lives of the world, where they have to sketch a beautiful scenario. The turnaround is coming, bait fast, don't give up. And in fact, this has been happening for quite some time. And I've written about it, commented about this, that on occasion I played golf with an economist on a Wednesday afternoon, and after a couple of beers he'll tell me what he thinks is happening, and then 2 days later I'll open up the newspaper and there's this gloriously positive view of the economy, and I'd phone him and I'd say, hey Mike, no, not Mike, not you, what's going on? He says, but I'm under pressure. If I tell you the truth, I'll get fired. So if you remember one thing this afternoon, be very, very cynical. What you read about the state of the economy from the big institutional investors, the fund managers, the spokespeople, they are under a tremendous amount of pressure to sketch a different scenario, and there's vested interest in there. I'll give you an example before I start my talk. And beginning of the year, I went to an Old Mutual presentation where, and you can Google it, it's on News 24, where the prediction was made, excuse me, that the rand will be 12 rand by the end of this year against the dollar, and that the South African stock market this year will be outperforming the average of the world over the next 3 to 5 years. It was an astounding statement to make, and it was so factually incorrect that, you know, one just needs to shake your head. And the reason is, Old Mutual, like the big other institutions, are sitting with such an amount of money locked up in South Africa. They know what's going on, but they cannot go and tell you, the client, what to do. So they're trying to sketch the scenario, bait fast, it'll reg kom. Meanwhile, it's not coming reg. We are all getting poor. The scenario that Mike sketched has been coming for a long time. He didn't even touch on things like the property market, where the property market is absolutely collapsed in many respects, residential property market. We're seeing the tip of the iceberg in terms of what prices are really doing. The same is happening in commercial property. I had a presentation from a company yesterday, Heystek, who were frankly very honest in saying, stay out of the local property market. It is looking dismal. Rental revisions are all negative, all down. In fact, I drove to Sandton Clinic this morning for the first time in a long time, and along the road, just past the Ferreira's Art Gallery, suddenly you see all these car dealers, they're all empty. Drive up in William Nicol Highway, those Mercedes-Benz dealerships, all empty. Further on Nicol Highway, that big, where that Maserati place used to be, or investment cars, all empty. I mean, this is in the richest part of South Africa, and the car dealers are all going bankrupt. Travel elsewhere in the country, ladies and gentlemen, and I tell you, the number is quite shocking. Now, Mike mentioned about profitability of companies. There's another research piece that I've got at home, a guy called Johannes Wessels. I don't know if you know who Johannes is. What Johannes did was, he went and he added up all the profits and losses of all companies in South Africa, listed or unlisted. And he added it all up. And he said, if South Africa Incorporated, Pty Limited, is one company, that company right now is making a loss. It's not making profits. Not making profits. And that is reflected, ladies and gentlemen, in what we've been seeing for quite some time in our charts and graphs. we've been noticing this going back in time. Let's just say where it started. As we know, there are lots of threats to your wealth. Mags mentioned a couple: inflation, currency, and lack of growth. But our problems actually started around about the time that Jacob Zuma took over. But our problems started when the commodity cycle started tanking. I was at Varsity many years ago, but my professor told us, if you want to understand the South African stock market and the South African economy, track the commodity cycle. And I've been doing that all my life. And when that started happening, ladies and gentlemen, there, 2010, 2011, as a result of China suddenly starting to cut back on their purchases, I thought this is the first warning sign that we are in trouble. Now, I don't have the chart here with me, but if you overlay the rand exchange rate with the commodity cycle, there's about a 95% correlation. That tells you the story of the rand. It tells you the story of our imports and exports, and it tells you the story of our trade balance. So you can see that has collapsed very dramatically, 2015, and it has stayed there. So one of the first things I look at every morning, what is the Bloomberg Commodity Index? What has it done the previous night? And that keeps on telling me we're in for trouble. And Mike mentioned, and that's against the slowdown which could happen in the world economy right now. And if China really starts getting into trouble, that will collapse even further. So the end result was that, first of all, we had a very big boom. Commodities, money was pouring into the country. Property market in South Africa was booming. Everybody had money, credit cards, bonds, more credit cards. It was as if there was no end to this amount of money coming in. Government also saw this as a non-ending flow of capital, and that's one of the reasons why they started spending and spending and spending. So the commodity cycle, ladies and gentlemen, together with the Jacob Zuma era, the 9 or 10 years that he was in charge, and we're still paying the price for that, has led to a massive wealth destruction of your money, my money, your kids' money, and your grandkids' money. And I don't think a lot of people fully understand how severe this is. And you just need to look at the damage that was done over time. I'm not going to waste too much of your time, but you know what I'm talking about. It's been all over the press. We're talking about 10 years of wealth destruction. That is a chart of how our growth came down, nice recovery, 2003, 2004, and it's just been on a downward slide ever since. Mike spoke about it, not going to talk too much about it. But the important point, we used to follow the cycle of the world, but for some reason, the last 7 to 8 years, we have dropped out. We're not competing anymore. We are now running in the second league, playing golf in the third league, or playing cricket like the Proteas. We're just not competitive anymore on an economic scale. Same with our rugby, soccer. Even Bafana Bafana are not doing well. So our economic pulse is faltering, ladies and gentlemen, and it's reflected in low growth. So this led me to write a couple of articles, MoneyWeb, other places. And I thought I'm doing the public a service, pointing out, guys, this is not going so well. Maybe you should look at this. Maybe you should look at that. Much to my surprise, I got slammed by everybody. Got commentators and the comments on MoneyWeb calling you all kinds of names. It was quite astounding. It was like going to a rugby game between the Springboks and the All Blacks at Loftus, and daring to arrive there in an All Black jersey. You know they're going to bliksem you. Well, that's kind of what happened to me in a certain way. And I was called negative and stupid, and it's all correct. But the fact of the matter is, this has been coming for quite some time, and we're paying the price. There's an article that was written in response to my original article. We are not on the precipice. It's just a temporary blip. Things are fine. I was involved in a debate with Ryk van Niekerk from MoneyWeb and Dr. Piet Krokamp, Dr. Piet Koptuk Krokamp, who absolutely assured the audience that any talk of this economic implosion, any talk of this collapse, the Zimbabwe style, is just plain rubbish. Well, that was 4 years ago. I'll come to Zimbabwe in a second. So, and we can keep on and going on. I mean, one of the reports columnists, not once, not twice, 3 or 4 times, warned people about taking money offshore, saying, take your money offshore is like investing in a black hole. You're going to lose your money. I mean, it's absurd, ladies and gentlemen. We are here, our economy, 0.5% of world GDP, our stock market, 0.5% of market cap of the world. We are faced with tremendous risks to our capital, and we have commentators saying, the rest of the world is a risky place. We're a safe place. Leave your money here. I mean, it's just bizarre. It makes no sense whatsoever. So let's move on. I replied back and I said, look, you're going to think like a bittereinder. Now, bittereinder is an Afrikaans term that says, well, you're never going to give up. We're going to stay here. Don't worry, things are fine. Well, I just pointed out we're already getting poor. And if you're going to keep on thinking like a bittereinder, you and your family, your kids, could end up very, very poor unless there's a dramatic turnaround in government economic policies, which I frankly don't see. I don't know if Mike sees it. I simply don't see it. In fact, it's just going the other way very, very quickly. So let's move on. We've got expropriation without compensation. It's a massive risk to a lot of people. It's a massive risk to confidence. I have some charts at home which tracks the performance with a bit of a time lag between residential property and also farming property after the announcement of EWC in December 2017. And it's amazing, and this is not reported stuff. You don't get it published. Newspapers have said that's the negative, not publishing. Well, the turnover in the residential property market is down by about 40%. You can see this, you can pick it up in the taxes that government collects from transfer taxes. That's already down 15 to 20% in terms of their budget. So you pick it up in other places. You can obfuscate the numbers, you can massage them, you can tell people things are fine, but somehow the numbers will sneak out and tell you the truth. If you speak to the economist Johan Willemse, who's well known for the farming community, he'll tell you property prices in the farming land, or farmland in other words, is down between 30 and 50% if you can get a buyer for a property. So it's all happening. These things have an impact. They have an impact on overseas investors watching South Africa. We had our fund manager from Momentum International here last week, and he says the first thing they discuss is, that bad, madam, you don't have to run. He was saying the first thing they say is, right now, South Africa is not on the radar screen of foreign investors. They're pulling money out of South Africa. Now, I don't like saying this, but these are facts that one cannot avoid pointing out. So what's been happening in the last couple of years? My son gave you an indication of the relative wealth, local versus offshore. Here again, we have our market has not done much for 5 years. That is the two major indices, the World Index and S&P 500. We're just not in the ballpark figure. We look at it over 7 years, and then Mags referred to the 10-year numbers. How after a period of relative, we kept pace until about 2013, 2014, but then we fell out of the bus. For those of you who run the comrades, which Mike and I obviously have not, you can keep up with the pacemakers, but at some point you can't keep up and you drop out. And that's what's been happening. Sorry, Mike, I'm assuming you haven't run the comrades.
Oh, no. Thank the Lord for that.
Okay, so you still got your knees and your hips. So the JSE is paying the price. If you look at the 15-year numbers, ladies and gentlemen, we were still okay. But that was the first 5 or first 4 years of that 15-year period. We still had the economic boom, commodities, and especially listed property was doing extremely well. So that carried us. Since then, over 15 years, and over 10 years, we're starting to drop back. Foreign equity is now the top, SA equity the second. But over 5 years, you can now see, and if you do it over 4, 3, 1, it's the same story. We stay last from the last 5 years. And a lot of people don't know about this because the media doesn't talk about it, the commentators don't talk about it. They focus about our performance in isolation. But we need to do it differently, and these are the facts as far as investments are concerned. So, this is just an example of, and I mentioned at our other seminars, the last 10 years, the gold rush has been not here in South Africa, but has been in the technology sector, mostly in the United States of America. It's been one of the largest booms, the FANGs, you've all heard about the FANGs, Facebooks and Amazons and Netflix, etc., all the stuff that we consume. But as investors, we've been watching America get extremely rich. We didn't participate because of Regulation 28 and also because of exchange controls. So that's just an example of how technology has just run away. Mike's also scared now. That scares me. So, we look at demographics funds. You've never heard of that, but it's a very nice sector. A lot of our clients are involved in that. In fact, that's an investment in the baby boomers, what they buy, what they do, what activities. It's been a fantastic sector to be in. Demographic sectors. I mean, when you were young, you bought baby prams. Now you buy, a Zimmer frame or something like that. But you buy different things. Again, it's focused in the United States of America. And we can go on to healthcare. A couple of doctors in the audience here, I know they'll bear with me. Cost of medical care in South Africa is going through the roof. Medical aid is becoming unaffordable. But if you want to participate in the technological advances in the medical field, biotechnology, got to be offshore. There's a fantastic sector. And in fact, we had to go to companies like the Momentums of the world and say, we want those funds because our research and our experience overseas has shown you've got to be invested in these things. And we actually brought them to South Africa to a large extent. So ladies and gentlemen, I can carry on. I mean, the media now started picking up that you're in trouble. There's just a collection of one or two front pages, Financial Mail, Mail and Guardian. As Mike alluded to, the fact that in 1980, when I became a financial journalist, the gold production in South Africa was 1,000 tons of gold. We were the top producer in the world. We think we had something like 65 mines listed on the JSE. It was just boom times. Since then, our gold mining industry has disappeared. We've got 3 mines left. And the Financial Mail is now asking the question, it's the end of gold. And if you want to invest in gold, you have to go and do it somewhere else. I mean, I might add that I think we're now the 8th largest producer of gold in the world. We were overtaken by this economic powerhouse in Africa called Ghana. Ghana, ladies and gentlemen, produces more gold than South Africa today. We've just fallen off the bus. And there are a lot of reasons for that. Electricity costs are high, but also the uncertainty about the mining rights. Who owns it? BEE deals. So if you want to buy gold shares and the gold price is running again like crazy, you don't buy it in South Africa, you buy it offshore. Even the JSE a month ago, based on the fact that you cannot avoid anymore, I must applaud them that they actually wrote a very good article, honest, sober assessment of the state of the JSE. They're saying, is South Africa incorporated? In other words, the JSE is still worth considering. A lot of facts and figures and charts, but essentially to summarize it, our activity as a percentage of the global activity has shrunk. 450 billion rand in capital has left. I'm talking about foreign capital, has left the JSE in the last 4 to 5 years. 2 days ago, we had the JSE reporting its results, announcing that the earnings are down sharply, and also another 28 billion rand has left the stock exchange. The number of shares listed on the stock exchange in the last 12 years have reduced from 700 to 350. The activity, the new listings, the IPOs, they've all just about disappeared. When last have we had a listing on the JSE that has made the country excited? It's not happening. It's not happening, ladies and gentlemen. Capital is not being raised by the JSE. But 80 to 90% of pension funds in South Africa not that high, maybe a bit lower, is invested there. A lot of your money is invested there. And if you don't realize that this is changing and making you poor, you could end up very, very poor indeed. Mike referred to issues concerning the Reserve Bank. That's a heck of a fight brewing under the surface. And if somehow government manages to nationalize Reserve Bank, and we don't know if it's going to happen or not. We've got lots of commentators saying, yes, it could, and others are saying it'll never happen. But it's a factor that you have to build into your scenario planning, ladies and gentlemen. If it happens, that would be really the end of the financial structure of South Africa, and we would be on the road to Zimbabwe in a very, very quick way. So that fight's happening. At the same time, Mike also alluded to government finances, and I spoke about it in a report last week. I mean, are we on the road to Zim? We are showing remarkable resemblance to what is happening, or what has happened in Zim over a 20 to 30 year period across our borders on the northern side. The other issues facing your money is the issue of prescribed assets. A lot of people have money locked up in pension funds, provident funds, retirement annuity funds, which are subject to Regulation 28 at the moment, which means that the fund manager and even us can only invest 30% of your money offshore. Now that's been in place since 2011, and that's had an incredible draw on your investment returns, with the result that over the last 5 years, most, if not all, of those pension funds have not beaten the inflation rate over a 5-year period. So if you've still got money locked up in a pension fund or an RA, an old style one in particular, and you're older than 55, my advice to you is get out of it immediately. And that is even before the new prescribed assets are kicking in, or could kick in, because it'll just further add to this drain of your capital. So, to end of my talk, ladies and gentlemen, are we on the road to Zim? I think we've moved further down the road to Zim than we would like to admit. Zim is characterized by massive inflation, collapsing economy, a collapsing currency, and a collapsing property market. I have a lot of friends from Zim in Mauritius, where we have a place, and they tell me the way they survived that period is because they had dollars. They had dollars somewhere else, out of control of the government, out of control of the pension funds, and they managed to survive, and they still have a good life. But you have to have dollars. Max du Preez, my old friend, who for years and years, as you know, has been saying everything's fine and everything's great. He wrote a piece 2 weeks ago. 2 weeks ago, Max admitted to a large extent that those people, and I'll translate for you for the benefit of the Germans in the audience, that those people who still are paranoid about the future of South Africa, you should not just simply write them off. Quite an admission from my old friend Max du Preez. So, ladies and gentlemen, that brings me to the end of my talk. You know, I've used at Brenthurst for many years. I've been to externalize a lot of our assets by selecting offshore fund managers, and we've also selected local fund managers using asset swaps to get some money offshore. When we come back, we're going to have a 5-minute comfort break now. We're going to listen to Tony Bell. Now, Tony was one of our fund managers we chose, I think 5 or 6 years ago, from a variety of reasons. And he's been managing the IP Global Opportunity Fund, which has been the Raging Bull Winner Award, and also My Plan was recently voted the best fund management company in South Africa, beating companies like Allan Gray, Coronation, PSG, and all the others. So it's quite an achievement for a small company to have won those accolades. So Tony's going to be giving his view on his fund, the way he invests money. That'll be followed immediately by Sam Hulu from Counterpoint, another company that we've teamed up to run some of our funds. And the one thing that I like dealing with people like Tony and Sam, they're boutique managers, they're small, they're prepared to take your call. And I can give you an example of what I mean. In December 2017, when the Steinhoff saga was going down, I phoned Sam and I said, Sam, how much money have you got in Steinhoff? And to my relief, Sam turned around and says, not a cent. We didn't like Steinhoff. So Sam was one of the fund managers who missed Steinhoff for various reasons. But just the fact that I could call him. Now, I can't do that with the Alan Greys of this world or the Old Mitchells of this world. And that's the way we like to manage our money. We'd like to talk to people all the time. So when we come back, we're going to be listening to these two gentlemen, and then we're going to have time for questions. So from me, thank you very much. 5-minute comfort break, and we'll start again in 7 minutes. Thank you very much.